Good afternoon, and thank you all for joining us today for the 2021 Africa Proptech Outlook webinar. This is our first webinar of our Africa Proptech Forum webinar series. So this is the first episode. We are looking to do roughly one a month, and we very much look forward to running these throughout 2021. For those of you who are not familiar with our platform or with myself, I'm Kfir Ruzen. I'm the Managing Director of API Events. We host and run the Africa Proptech Forum platform. Before I begin, I would like to provide just a brief overview of what we're doing with the APF platform and what our plans are for the year. So essentially, our mission is to fast-track PropTech adoption across African real estate. We've seen a real acceleration throughout the PropTech industry globally, but also in Africa in 2020. And essentially, we want to fast-track this adoption through multiple channels. We'll be hosting monthly webinars. We'll be doing events throughout the year, a startup competition, innovator series where we'll highlight and showcase the leading PropTechs in Africa, as well as also doing thought leadership newsletters and monthly newsletters just to keep the community in tune with what's going on in terms of trends, insights, and the latest news. So moving on to today's episode, we will be focusing on how or what the outlook for PropTech is in Africa this year. And we've got we're fortunate to have a very, very esteemed panel with us, and some great diversity in terms of region and sector. I'd now like to then welcome Will Harris, who's our moderator for today's discussion, and who will also be introducing the topic and the panel. So without further ado, Will, I'll hand over to you, and hope everyone enjoys. Thank you.
Thank you very much, Kafir. Hello, everyone, and welcome to today's session. As Kafir said, you are part of the first ever Africa PropTech Forum, and we're all honored to be with you. Our mission here is to drive efficiencies for Africa's real estate industry, and our lever is the adoption of technology and innovation. New ways of solving age-old real estate problems are available to us. As Africans, the opportunity is ours to seize them and show the rest of the world the way. By way of introduction, we're joined today by the following speakers: Roland Igbinoba, MD of Paz & Housing and founder of Proptech Nigeria; Kevin Rolfe, CIO of CBRE Excellerate, one of the biggest property managers in Africa, certainly the biggest in South Africa; Sean Godoy, MD of Divercity Property Solutions, co-founder of Proptech Africa; and last but not least, Gil Sperling, the CEO of Flow. To introduce me, I'm CEO of Gmaven. We look to digitize commercial real estate for Africa's top brokerages, advisories, and property funds. And to give you an idea of my age, we were around long before PropTech and data was a thing or even cool. Some quick housekeeping. Your voice is very valuable to the session, and we would love to hear from you. So please feel free to pose any questions during the course of the session, and you can do so on the platform's chat. If your questions are of a pressing nature, we will try to address them immediately, else we'll cover them at the end. From a format point of view, we'll literally go through 5 questions, posing one question to a specific panelist with opportunities to comment from the others. During the session, we're going to run 2 polls, so keep your eyes out for that. From a housekeeping point of view further, the session is going to be recorded by the team at API and will be available online 24 hours after session and then move to YouTube. If there are any takeaway docs or links to information discussed, you can trust that these will be included in a video description available on YouTube after this. Here at a high level are the topics we're going to look to cover. The first one, given global trends, what PropTech innovations will be most adopted in Africa in 2021, and specifically what won't. The next one, PropTechs in Africa, unicorn or zebra. Should businesses aim for hypergrowth or grow safely? What are Africa's specific problems and idiosyncrasies? And how are we going to respond with Africa's specific solutions? Third question, how will PropTech fit into Africa corporate and commercial real estate strategies? Fourth one, will venture capital and corporate venture capital, real estate company investment into the sector grow? And then finally, which sectors do we believe will see the most tech disruption? Will it be office, industrial, retail, housing, resi, MDU, or hospitality, finance, or construction? We're going to spend 5 minutes per topic with an initial time box 2-minute reply, as discussed earlier, and then the balance of time will be spent by panelists addressing the items. We also will share your poll results and then aim to dedicate 20 minutes to covering all your questions. So, for those who are just joining us, welcome. The first ever session explores the intersection of Africa and Proptech, and we're joined by Kevin Rolfe, CIO of CBRE Excellerate, Sean Godoy of Divercity and Africa Proptech, Roland Igbinoba of Nigeria Proptech and Python, and Gil Sperling, CIO of Flow. A copy of this will be available for 24 hours on this platform, and thereafter, all attendees will get an email with a YouTube link. Right, guys, we're 6 minutes in. Let's move on to our first question. Given global trends, and we're going to be posing this initially to start off with Kevin Rolfe, what Proptech innovations will be most adopted in Africa in 2021, and what do you think won't be, Kev?
Well, hi, thanks. Good afternoon, everybody, fellow panelists. Thanks for the opportunity to spend some time with you. Yeah, it's a great question, and I think that there's going to be a bit of controversy coming out of this side of the chapter today. I want to go and say 2021 was a very, very tough year for the industry. I look at our business. We've definitely seen a lot of shifting trends, just based on what's happening in the market, based on what we're seeing in a number of the different sectors. So I want to say that in the future of 2021, I think we're going to see very, very little adoption in terms of technology. I think what we're going to see is consolidation of technology. I'm going to put my money onto the fact that businesses are trying to recover from what was a very, very tough year last year. And I think what that's going to imply is that it's going to see not only consolidation of platforms, but I think it's going to be a relook at how staff are engaged and how staff are leveraged. I think we've got to move away from the traditional patterns of management. We're going to have to look at more detail in terms of data, how we process analytics, how we start to leverage insight and information more effectively to try and, I want to say, remedy what last year caused in the property industry. And if I look at it in the broad perspective of Africa as a continent, I mean, we have a number of countries marred by upheaval, economic as well as military upheaval. So I think what we've got in that industry again is very much I want to say a keeping of pace with where we're at, trying to recover, trying to keep a foothold in. We've seen it in our business, particularly in the retail space, where because of COVID, because of lockdown, tenants not being able to trade, we've definitely seen that industry impacted in a very, very hard way. So I think what companies are going to probably have to do is they're going to have to find themselves as technology-led as opposed to technology innovating at this point in time. I think the normal trends of the adoption of cloud, hyper-automation, all of those things are great as concepts, but I don't think that we are going to necessarily see that as an appetite across the continent in 2021. Perhaps when we stabilize in a year from now, we might see a bigger adoption in terms of technology.
Will, you're on. There you go.
Thanks, guys. Thank you, Kevin. That's a great perspective, and I think very pragmatic assessment. Certainly a sign of the times. Anybody would like to chip in there? That's
anybody. Yeah. Well, thanks. Can you guys hear me?
Yeah.
Cool. So Will gets the first talking while unmuted award. Normally it's me actually, and I'm a Proptech guru apparently. So good to be here. Yeah, great panelists. Thanks to everyone. Kevin, yeah, I really sure. I fully agree. Actually, it can be a somewhat of maybe an unpopular opinion, but this whole conversation has COVID driven adoption of technology, etc. It's created opportunities, yes, and sometimes technology has needed to be adopted quickly. If you look at Zoom's share price last year, they filled an immediate gap in a very quick way. They were able to scale, etc. But many companies weren't so fortunate. So just my, I guess, observations from our side is that we can't forget that the economic sort of background that we're playing against and the massive challenges, like unprecedented challenges, disruptions in economies. So I have conversations with different people, and some are very frustrated with, landlords, property managers, various people. And I just keep saying, I'm like, you've got to understand what these people are up against. So I think there doesn't mean there's no place for technology, but I think we need to be realistic. So I just wanted to echo Kevin's comments. I agree wholeheartedly.
I'd just like to add one thing briefly. Thank you, first of all, for having me. It's a pleasure to be here. So I also tend to agree, and I might just say that if we look at it on a basic human level, adoption of Proptech actually would happen out of necessity. So out of survival mode, people will adopt what's necessary to survive, as opposed to a nice to have. Like it may be nice to have to adopt something. There's where it could maybe allow us to be more profitable, but when you're in survival mode, you will adopt what's necessary. As a simplistic, almost cliche example, during lockdown, the hard lockdown last year, when people were not able to view properties during when they were finding properties, we started sharing videos across WhatsApp, and then companies like Matterport became far more important because that would be the only way to immerse yourself in a property during the phase where you're finding a property. And that's out of necessity. I'm at home. I have no way to make that decision, and now I can. And so that's an example of simplistically of tech that's been adopted and accelerated. And therefore, I think in the next year, during this year, 2021, the technology that will be adopted will be out of necessity.
Awesome, Gil. Thank you. Thanks for weighing in there. Fully agreed. I think the age-old painkillers versus vitamins
That's it.
sort of metaphor comes to mind. Hey,
exactly.
Guys, we're doing all right from time. We're going to move on to our second point here. Great points. Sean, I'm going to pass this on to you because I know you've got pretty strong feelings on this. Proptechs in Africa, unicorns or zebras. Should we be blitzscaling or just trying to grow at a pedestrian pace, and then maybe unpacking the Africa-specific problems and idiosyncrasies and our responses? We're interested in your thoughts.
Yeah, this is a topic. I've stolen this zebra from someone else. I don't say I'm the pioneer, but there was an article last year. I can't recall from who it was, so I won't try to guess. But basically, it said, the world's been fixated on unicorns for quite some time. And, since the birth of tech, it was really exciting that these companies could scale ultra quickly and meet this $1 billion valuation. And for a lot of people, that's the dream, that's the goal. But this article, the author basically put forward the question, do we want all our resources to go into 5 unicorns, or would we rather have 200 zebras, which are companies that, there's no figure on it, but they're worth obviously a more, perhaps an achievable sum for the everyday man on the street who starts a business. So basically what this kind of, I guess, a strategy or an ethos, and I think it fits really well within the different African regions and all their complexities and diversity, is, why don't you need to build a basic, build a business model that is sustainable, that meets a need. You need to get customers, and build a revenue. So before you aim for the stars, just don't forget those fundamentals, because business fundamentals haven't changed since Tesla invented the light bulb or electricity. I just forgot what he actually did. It isn't great, but yeah. So that's what I think. Like we need to aim for the stars. Let's not limit us. Our technology is awesome, but in the context, be reasonable and bring it into an African developing complex market scenario. Like we desperately need SMEs, small to medium-sized enterprises. Tech startups are awesome. Our tech ecosystems are growing. Proptech is still in a lower end of maturity, but the VC sort of confidence is growing in Africa with things like fintech, health tech, agri-tech kind of getting the lion's share. But for PropTechs, I just think they need to look at this and think, I want to solve a specific issue. I don't want to be valued at $100 million in the next 2 years. I want to build a business that pays me a salary, meets a need, adds value to the market, and then what happens after that, that's cool. And you might also be more likely to attract those investors when you need them. So it's just a bit of an ethos. I'm not an expert. I haven't started a tech startup, but in terms of a general strategy, I think it meets this need of we need businesses to start and to keep running. Like the amount of startups that fail, there's a wider story here about, sustainable development goals. Like we've got to address inequality and poverty, etc. And within property, that's access to housing, access to property as an investment class, helping people build back rooms so they can generate a rental income, and build this income producing asset. Like, they could be the first in their generation that has this asset that earns them income. So that's where I think it's a bit of, maybe I'm going on a bit of a tangent, but that's where it comes down to, is like build a business that will be around in 5 years, and how are you going to do that? You're not going to do that by trying to be the next Facebook or I don't know, there's some American Yardi, some of these huge examples that have raised hundreds of millions of dollars. I mean, you can get there, but why don't you just try and make sure your business is sustainable first?
Thank you, Sean. Guys, anybody else interested in weighing in?
Yeah. Okay. So just to follow up with Sean, I think the point is very important in terms of these companies that have been defined as zebra companies. Because what you find in Africa is, I think, PropTech is emerging, but the infrastructure for PropTech is still, we're still not there yet. So I totally agree with you to look at the space where you are looking at some of these zebra companies coming up and, playing on the served market. And so across the value chain for real estate, you can find a lot of these small businesses, beginning to play very tech-enabled. They may not be tech companies themselves, but they're companies that are enabling tech to be able to provide the robustness that we are all expecting in the PropTech market. And the way I see this evolving over the next 5 years is to see that a lot of these small-sized companies, or using the definition of zebra companies, will definitely, as the infrastructure in the continent improves, will have the potential, to get to unicorns. But I think the thinking and the idea is, let's not begin to think of having a startup and what's our mind is unicorn. The zebra companies have significant role to play as the PropTech industry in Africa begin to evolve. Thank you.
Thank you, Roland. Guys, 30 seconds left. Anything we can fit in there?
Yeah, if I just may add, I guess as the PropTech entrepreneur in the trenches, so I do tend to agree, but as a principle and across industries, is that when an entrepreneur focuses on creating true enterprise value, the money flows, the valuation flows, it all comes. And we're playing in the most valuable asset class in the world, in property. If you look at it broadly, there's tremendous value in property. And so when an entrepreneur creates value and unlocks value, the valuation may come. So I think the nuance is that, again, as from my point of view, in the trenches, I do have to aim high. I have to dream. The dream is important, but I am careful to not be starry-eyed by the amazing Silicon Valley stories of billion-dollar businesses. So I think a dream is important, but creating an underlying fundamental enterprise value is when equilibrium really prevails, and you will get valuations. That comes when you create value.
Well said. Thank you, Gil. So guys, good points on either side. Third question, and I'm going to pass this on to Roland here. Roland, in your opinion, how will Proptech fit into Africa corporate and commercial real estate strategies? So I think moving away from the guys in the trenches, the girls, the myself of this world, and looking more at the Kevin Rolfes, the guys who advise in Kevin Rolfes, like Sean, specifically the guys wearing the big corporate hats and walking on the big checkbooks. How do you see Proptech fitting into their world and their strategies? Mute.
Maybe I'm silent. Yeah.
Oh, sorry. Trying to stick with you. Okay, everyone can hear me now, right? So I think for me, it's for corporate entities, right? With COVID-19, it's just escalated the way spaces are managed. So now, looking at how technology fits into all of this. Okay, so I'll give an example. Zestimate. I don't know how many of us know Zestimate, which is a Zillow company that do online valuation, right? We don't have that yet in the continent. I've searched. Okay, you may have a few pieces of people trying to do that, but there's nothing like a Zestimate in the continent. What am I trying to say? Commercial real estate properties right now, they still go through the traditional way of valuation and all of that. So for me, I see that with the trajectory and the trend that we're in, over the next 5 to 10 years, you're going to see a lot of adoption of Proptech with the corporates. And when you talk about the corporates, you're talking about both those who are on the investment side and even those on the supply side. Okay, but if I focus on those on the supply side, so how is Proptech enabling tenant experiences? Okay, how is it enabling energy usage? What about space utilization? Today, they are self-running buildings, okay? And I'll give an example of Nigeria, where I know that there are a few startups beginning to come up, helping with tenant experiences, helping in facility management for corporates. So for commercial real estate, you're beginning to find that there's a lot of adoption, for Proptech. Now, I don't want to jump into when we start to discuss how venture capitals and CVCs sees this, but just to say that once we begin to pilot some of these with the corporates, what will happen is you will see a lot of flows going into that sector. So now we have I'll tell you again another example. Sorry, I can't mention names because of confidentiality. So for example, in Nigeria, we have about 2 startups who are right now incubating and piloting with corporate and commercial real estate firms. What are they trying to do? They've taken their solutions. They're trying to see whether these solutions can be scalable and whether the corporates themselves can utilize this. So what you are going to find is that as people begin to find solutions and as this kind of incubation with startups, the partnership between startups and traditional real estate firms, especially the corporate and the commercial guys, as this begin to happen, you will find a lot of people also following the same path. So I think just to round up, I see that across the value chain, there is a lot that can happen. And right now, like I said, the examples that we're having out of Nigeria, it's seeing where the corporates and the commercial real estate firms are providing incubation for startups who have presented to them the kind of solution that will enable them do transactions better.
Thank you, Roland. Can I open it up to the rest of the panelists? Really good points there.
Yeah, so I'll weigh in a little. I've experience in the in the banking and fintech environment, and I think kind of to the point made earlier that PropTech is still in its infancy. I think that the maturity path for this industry in partnership between corporates and startups is in its infancy, but will definitely start to gain, I guess, the traction that you would have seen across the fintechs happening in the banks, right? So organizations such as ours, where you're fulfilling only certain parts of the supply chain or the value chain, will look to trusted partners and start to open the opportunities that I think smaller players and niche players will bring to the table to allow a bigger share and participation in a larger part of the pot. And I think that's just a matter of time. I look at again, the fintech banking world. The big banks have started to adopt it internationally. There's a lot of adoption in South Africa, and in Africa a lot less. But even that is now starting to see that trend happen, and it's taken 5 or 6 years for that to become mainstream. So I guess 2-3 years from now, I think that this is going to be more business as usual.
Awesome. Thank you, Kevin. Guys, anything you'd like to add?
Just quickly, great point. Sorry, just that's important to note the lags, like how fintech led the wave in banking and finance to how real estate is behind that. So yeah, Kevin, I think that's always important. And then also our regional country specific maybe lag to, not always a lag, but in terms of where PropTech is in Europe and the US, it's there for certain reasons. And we need to focus on our dynamics and challenges and opportunities. But yeah, great points, Roland and Kevin. Thanks, guys.
Cool, guys. We're going to move on to point 4 here. And I think we've been touching it. So let's actually dive. We've been touching in the previous questions and answers. So maybe let's dive deep into it. And the question is, will venture capital and corporate venture capital investment into the PropTech sector grow? And I'm going to start off just with some data points to set the scene for what it looks like in Africa. Credit to a chap called Max Bayern on Gumroad. You can find him there. Over the last 2 and a bit years, he's actually tracked all VC deals, subject to the following disclaimers, across Africa. It's been a massive piece of work, and I'm actually going to share some numbers here. So in 2019, Africa saw $1.3 billion in VC investments for 103 deals. In 2020, that climbed to $1.6 billion for 226 deals. And in 2021, so far, year to date, we're $325 million covering 63 deals. The fine print here, this data only includes startups operating in Africa with their headquarters in Africa or with their headquarters outside of Africa, but with founders operating in Africa. For 2019, only deals more than $1 million were tracked, $500,000 were deals and grades that were tracked in 2020, and $100,000 and above were tracked in 2021. This database mainly captures publicly disclosed deals or deals openly shared by the investors or the founders themselves. Okay, so just to recap, 2019, $1.3 billion, 2020, $1.6 billion, and 2021, $325 million in venture capital funding for startups in Africa. The big question is how much of the VC funding was for PropTech, and again, this is coming from the numbers, and please feel free to include in the comments if you think these are incorrectly stated. But in 2019, only 0.5% of all VC funding over 3 deals, and that's $6.7 million in total, went to PropTech. In 2020, of the $1.6 billion in funding received, 0.6% went to PropTech for 4 deals of $9.8 million in total. And in 2021, and I stand to be corrected, but 3 deals out of Egypt, taking up 0.4% of the $325 million raised so far for $1.3 million. So I think there's some quite interesting insights that can be gleaned, and I'm going to lean on both Sean and Kevin's point that certainly from a predictability point of view, it does look as if we are lagging the PropTech industry in Africa, and it certainly looks like if you're looking at trends overseas, that these numbers are going to be climbing really fast, that they're a very small percentage of total VC funding. With those data points in place, I'm going to hand over to the team of panelists, and I'd be really interested in your guys' insights. I hope you found these numbers useful.
Yeah, should I kick off with some comments? Yeah, this is something I've been following. So I've done a bit of PropTech research in South Africa and East Africa, and I follow things quite closely in West Africa, where Roland's obviously very, very sort of on the ground and connected. But it's a really interesting story. Like my background is a research analyst, so I'm all about the macro down to the sort of specific point. So macro, it's really encouraging to see where general VC tech funding is going. There's a number of sources. So there's one I use that is the numbers are slightly less than yours, but they all use different parameters. But one thing that is clear on all of them is the trajectory is massive. Like we've seen, like since 2015, I'm sure there's been like, maybe eight or 10 times growth type of thing, just off the top of my head. So that's really encouraging as a backdrop, showing that VC appetite and confidence is growing, in African tech in the different regions. And obviously our PropTech's a tiny splash in the ocean, but also, perhaps it's hundreds of millions or billions of dollars in US VC, like PropTech, but also in terms of their greater VC pool, it's probably smaller. So globally, it's still relatively early stages, but like if you look at the macro fundamentals, there's just a lot of good opportunities in real estate in Africa around various things. Our residential markets are quite robust. We've got massive housing need in a lot of countries, and there's a lot of things around management, transactions, etc., like where Flow plays and some other very interesting PropTech. So, where will VC go? Like, I agree, it can only increase PropTech. And there's some big challenges that PropTech can solve, most definitely. So I'm quite excited, and I think it's great. FinTech's kind of leading the way, so we can learn some lessons from what's happened there. And I'm seeing more purely African-focused VCs with founders from within and outside Africa, which is encouraging. Like, in terms of a VC, you basically, it's not like, oh, I want to invest my money. It's like, I need to put my money somewhere and it needs to make money. Like, so they're hungry for opportunities. So Africa's been a bit of like, it's a bit of a gap in terms of data, information, etc. But I mean, that won't change overnight. It has been changing gradually in an encouraging way. So the future, it'll be a small part of the pie, but it's definitely growing. And I think it's an exciting time for PropTechs to like make themselves heard and for people to, go start developing their ideas in a meaningful way. And, look for, a colleague of mine says pain points. So look at pain points in markets, Know your hood is a big thing that some property analysts and academics say. So, know your country, know your region, because Northwest East Africa is very different. And last thing, sorry, I tend to get carried away, but the big four countries in Africa that are getting the lion's share are, I'll just see if I remember the order. So it's Nigeria, okay, I don't know the order. It's Nigeria, Egypt, Kenya, South Africa. So that kind of tells you the spread is like regionally, each region is represented, which is quite cool. So within your region, that people investing, and we have varying types of real estate markets that are different levels of maturity, but they all have opportunities. So it's small, but yeah, it'll grow. Sorry, I'll end it there.
Okay. Can you hear me? I think you're muted. You're muted. Will, I think you're muted.
That's a second offense by me. Roland?
Okay, so yeah, I was just going to add on to Sean's point. Okay, I'm a proponent of the fact that for us to ramp up PropTech in Africa, we must bring in the corporate real estate players. I call them the traditional real estate players. And the reason is simple. Now, the startups often don't have the muscle, okay, to scale. Even some startups, can't even get to proving their concept because of as little as maybe $5,000 or $10,000, okay? And it's the reality in the continent. And so how do venture capitals define themselves? Different venture capital firms define themselves based on whether they are doing pre-seed, they are doing seed or Series A funding. And then you get those who are focused on Series B funding. But in all of these definitions for VCs, there are some very basic things that are clear. Okay, it's what's the market? What problem are you solving? What's the competition in that market? The product that you're bringing to the market, what is the economics of that product? And so you find that a lot of the startups here, especially in PropTech, don't have all of that incubation or mentoring process. The good news from the figures you just reeled out, Williams, and like Sean said, is that we see the trajectory going up. I see the numbers in real terms going up from 2018, 2019, okay, and 2020, and then even in 2021, out of the $325 million. So at least we're not recording zero. But what needs to happen is there needs to be huge collaboration, okay? Collaboration that leads to proof of concept. Collaborations where startups, the story with fintech is different. If you brought a fintech product right now, okay, people would jump in it because the market is all over in Africa, it's emerging, people have proven the market. So people are looking for the next ideas in fintech. But with PropTech, you have very little proof of revenues, of commercialization, of what problems are you actually solving. And you find a lot of these young startups, they have the ideas, and you all will agree with me from all our experiences that you come up, day one, you come up with a product. Through the process of ideation, iteration, by day 90, the product is looking different. Why? Because you are beginning to see that there are certain things that you haven't addressed that you need to address. And so I think things like accelerator programs, I think things like incubation hubs, okay, mentoring, I think hackathons, in focus in the PropTech industry. I think this will help, a lot of VCs to begin to look at the industry in the continent and see how to put in money. I think that's my take around, what will happen with VCs, and CVCs.
Yeah, I can add as well. I'm also involved on the investment committee at a VC called Kalon, which is quite a prominent tech VC in South Africa. So firstly, I can attest to the fact that there is more capital out there, and there is more entrepreneurship and tech companies. So the ecosystem in general, the tech ecosystem in general, is certainly expanding. So that's the positive, and I see it firsthand. For PropTech specifically, I agree with what Roland said. If you look at trends in far more mature regions like the States, you actually get PropTech specialized VCs. So currently in South Africa, and in Africa, I think VCs are a bit more generalist, mainly because the pool is just too small, right? But what happens in a more mature ecosystem is that there's consolidation and verticalization, and in the States there's verticalization towards prop data and towards PropTech in terms of VC companies like Metaprop, like Fifth Wall. And their LPs, the money behind them, are the corporates, right? So I agree that the real muscle behind enabling PropTech should be the corporates. They are the guys that are sitting on the cash and on the power, and they should enable the ecosystem. But there's nothing at this stage in South Africa or in Africa to facilitate that. Like in the States, there are verticalized VCs like Metaprop and Proptech, Metaprop and Fifth Wall. And so, if the same trend occurs in Africa, this Proptech will be enabled by verticalized VCs that are backed by the large corporate players in property. This is how I would see it pan out, but it would take time, but it's certainly on the up, and I would predict that it would happen.
Buying it, Gil. Buying it.
Just,
Guys, should we move on to the... Yeah, okay.
1 second. I want to throw something on the other side of the fence for a minute. What you guys are saying is absolutely valid, but I want to kind of put the corporate hat on and go and say, for the guys to put their money into this, there absolutely has to be the perception of there'll be a return on my investment, right? And I think the biggest challenge that we face, and particularly, I mean, I go back to the numbers that Sean threw out in terms of the big ones. Nigeria, by all means, the biggest player, but very, very difficult to get into that market as an outsider. The others, absolutely strong players. But I think the challenge you face is twofold. One is there are multiple barriers to entry, the legalities in the different countries that prevent entry into those markets, number one. And number two, the other thing that kind of comes out of it, and that's kind of where I want to go and say that if you do find a unicorn in a field of horses, you've got to kill it, because it unfortunately makes all the other horses look bad. And on that, Gil left the room. I'm sorry, Gil, I didn't mean to cause any offense there. No, but kind of the principle around it, though, is that oftentimes, particularly in the startups, and again, I'm going back to the experience I've got with fintechs, is oftentimes there is a misunderstanding of the value of the idea or the concept, and the valuation that gets put on the table up front becomes inhibitive to a proper that is long-term sustainable.
But those are things that are symptoms of an immature ecosystem.
Absolutely.
And I think that, again, hopefully as the ecosystem does mature, that those barriers are overcome, but totally agree.
Thank you, guys. We're going to move on. This is the fifth topic, and then we're going to open, we're going to review the polls, and then move to a quick Q&A, and then we'll wrap up afterwards. So yeah, three points left on the session. The final question, just to go to a very high-level view here. Which sectors are we going to see the most tech disruption in? Would it be office, industrial, retail, the larger sort of housing resi play covering multi-dwelling units, hospitality, finance, or construction? That's the big sort of question, and I'm going to throw it at Sean, but I'd love anybody else to build on from Sean's thoughts.
Great, thanks, Will. Yeah, this is a complex, perhaps slightly loaded question, because there's a lot of ways to approach it. But also, just raise your hand if I start waffling on a bit too much. But yeah, it's an exciting one because real estate's all about the sectors, and they all respond differently, and they operate slightly differently. On top of the same kind of foundation of real estate fundamentals. But there's kind of the long, medium term, I guess, if you looked at things. Short, medium term. So obviously with last year and sort of lockdowns, etc., a number of sectors were impacted quite quickly. So obviously office stands out, and that includes traditional office, and obviously the massive sort of wave of co-working and how that cemented itself in the segment. So that was tough, and I think office landlords are just starting to figure out what to do, because it's been so hard. Like, some people say, oh, they're not moving quick enough, but you never knew when the next lockdown was around the corner, and we're actually still in that stage. So it's a very, very unpredictable playing field. But just in terms of to set the scene, I guess it's to understand who was hit, worse, as office and retail, logistics gained with e-commerce, etc. Residential's interesting because it was always there, and people would spend times at their home, obviously, but now they were spending all of their time at home. So some people's interpretations of how they use their space and what they need, moving out of city centers for cheaper rent, bigger properties, or perhaps people are building outdoor office sheds, which happens in the UK. I think in the SA and most of Africa, houses are a bit bigger, so we don't have to build sheds in our garden. But that's just depends on obviously where you're living, etc. But in terms of Proptech, it's short term. These massive office vacancies are a huge problem, especially on balance sheets of large landlords. So they need to the space needs to generate income quickly, because the tenants, the big corporates who hold these leases are going to start questioning what they need to do. So we were seeing this before COVID, that there's startups and companies that come to you as either the landlord or the occupier, and they're like, listen, we can take this space and turn it into a co-working space. And that doesn't necessarily mean making it look cool and putting in little bubbles and stuff, which is important, yes. But it means like we can put the infrastructure in and we can plug you into a marketing platform. And this space, next week you could be selling this space per hour. So that's quite cool. And that's very much, it can be, it's sort of a mix of hospitality tech. But for me, the office thing it's a huge, huge issue for landlords. South African context, our REITs are basically, the REITs are basically commercial property, and commercial property has, I think, been hit obviously hardest. This, like, a good example is the sort of buying activity we see in the SA residential market, which has sort of bucked where you think it should be. But they need solutions. So there's empty space basically that's not generating income, and people aren't going to keep paying those leases. So lots of potential there. It's happening, and it'll continue to happen. And we like in Africa, the research I've done, we've actually got awesome co-working ecosystems and companies across the continent. So we've got a good base to go from, so they can move and act quickly. And there's space for Proptech entrepreneurs, I think, to come in somewhere on this sort of converting space, managing space on a flexible basis. So that's really cool. Next is probably retail. Obviously, people stopped going to malls. On the sort of market analysis sort of view is that, neighborhood centers are booming. Where I live in the east of Johannesburg, actually a new neighborhood shopping center, which is, what are the sizes, like 8 to 15,000 square meters. They have a supermarket, some restaurants, maybe a pharmacy, small independent shops kind of thing. There was one that opened in, what was it, this late November, early December, the shopping center opened. And you kind of think that is probably the worst time in the history of the world to open a new shopping center. But it's booming because it's close to a high income area. It serves a purpose. They were very clever with their tenant selection. So it actually was robust against the COVID issues. But just to round up, so retail's another one where the shared concept can really come in, I think. Shops are closing. Tenants are like, all our sales were mostly online. Now they're like almost all online. We're going to shut our shop. So I think retail landlords also need to think about how can we create interactive space, engaging space. How can we do the shared concept for people who want to sell their goods and services? And we're seeing it kind of pop-ups. I've seen a creative agency take a space at the Zone in Rosebank, which is a very, very popular shopping precinct, which is part of a mall in Johannesburg. They took that space and they set up video booths that the public could use for free as long as they tagged their marketing agency. So obviously they went to the landlord, the shop had closed. It was a shoe shop, and they're like, I don't know if they're paying rent, but they're like, you're going to get social media attention. Let us use your space. So both of us, it's a PR play, and you're not got an empty shop there. So, and then it's shared retail concepts which are quite prevalent in the US and Europe, where a shop you can put different products in. But sorry, long answer short. I think in the short term, office and retail, if that answers your question. Sorry.
Well, thank you, Sean. That's much appreciated. Anybody would like to weigh in before we move to the polls?
Maybe a thought. Left field. What about?
Can you guys hear me? Can you hear me?
Of space. where office parks become agricultural or industrial hubs. Vertical gardens taking precedence in inner cities. I don't know whether we need, and I get the principle that we're doing a lot of co-working and shared hubs, etc. I guess the question is, at some point in time, that market will find itself saturated as well. Will we ever go back to the way of work pre-COVID, where more than 30 or 40 or 50 or even 60% of a workforce will return to an office? And what does that mean? I think Sean alluded to the e-commerce boom. I think that e-commerce boom is going to fundamentally change the retail, and that in itself will lead them to realize that you do not need brick and mortar to move product. So I think there has to be a reinvention in terms of the way that property and space is utilized, and it will not become a derelict run down in a sense.
Yeah, just very quickly. That also, like the way COVID just landed on us, like the conversation, if you look at webinars last year, it was very COVID focused around every industry, which was needed. But you make a good point there. There were very important trends happening before this that we mustn't forget, like shared space, e-commerce. So some of this it was already there, but then you mentioned urban farming. Things like this are very interesting, converting suburban office parks to residential or mixed-use lifestyle estates. There's trends in our cities that are quite interesting that were there. And then Maureen Mungai in the comments just said something interesting. She's like, some of these changes are temporary, and I think we need to remember that. We're creatures of habit. Personally, I'd like to go back to the office full time. Everyone's different, but that's just another element is, this is temporary, and we mustn't forget the major trends that were there and are very much still with us. And then lastly is the rise of the suburban node. So people are at home. Co-working spaces might open in large suburban nodes to service, like a corporate might take, say, for 2 days a week, my accounting employees, you go work there. That's in your suburb. That's in your suburb. The rise of neighborhood retail, etc. So that's another thing that's quite exciting. We didn't mention hospitality. That's a whole nother thing, but obviously a lot to consider there. But great points. Thanks.
But guys, I just wonder if these are trends that are enabled by, or is there an opportunity for Proptech to enhance them? So are these trends that are dependent or independent on Proptech, and do they cross? Do they overlap? So I guess that's where. And I mean, it's so step one. These are the trends, and I think we're aligned, and it seems like by the comments that most are also aligned. Step two is, will entrepreneurs find opportunity within these trends to enhance it, or to unlock it, or to enable or to accelerate it?
Can I jump in?
Sure.
That's actually like a really good point, because it's easy to kind of maybe deviate from the topic, but exactly, we're talking about Proptech here, and there's these major challenges. And in answer to your question, most definitely, startup entrepreneurs can move very nimbly, or kind of Proptechs that are already operating, they can move quickly and nimbly to meet the needs and like address the pain points of these big landlords, of these developers, of these property management companies. So you raise a really important point. With crisis, there's massive opportunity. Like things need to change quickly, and so in answer, yes, and thank you for bringing that up. That's actually a really crucial point. Is that with all these trends, disruptions, there is lots of opportunity for creative entrepreneurs in Proptech.
Right. Agreed.
Yeah. I think the Proptech industry will solve these problems. I don't think the current thinking with the guys with the $1 billion checkbooks are going to be the ones that solve this, because it's business as usual for landlords and estate owners, etc. So I think that for the change, and yes, I agree that a lot of it is temporary potentially, but I think that temporary has also forced a different way of us working, a different way of us thinking. So, we'll stick with the things we like, and I think the only way that will change is by people who are willing to challenge the status quo.
Right. Yeah.
Thank you very much, Kevin. Thank you, guys. We're going to move quickly onto the poll. We've got 5 minutes left, but we're going to run it longer if we can. Guys, please, yeah, it looks like all the answers are through. If you'd like to quickly make an update, you've got another 10 seconds to do so. We're going to, after that, run through a couple of questions. Just watching some changes come through here. I'm going to move to the first question while we're waiting for the last bits of votes to come through on the poll here. The question is, any thoughts on digital platforms and solutions that enable banks to lend mortgage finance to low-income and informally employed customers? So low-income, informally employed customers, so that's pretty much an African problem. How would we see digital platforms coming to the rescue, where banks perhaps don't have vanilla solutions out the box to assist these potential borrowers?
I've actually seen some examples. Truth is, I can't remember offhand the name, but what the guys do is they use AI and take signals from a person's basic phone to identify risk. And these loan businesses who are not as big as banks, but do loan, I think, mid-sized amounts, assess the risk not from formal procedures and documentation and so on, which the informal sector will lack, but assess the risk of basic signals from a phone. For example, the how you order and how you name your contact, the battery left on your phone, and funnily enough, these are signals that certainly do identify risk. And so that's where these guys have been relatively successful, and I think we're seeing quite a bit of that, and I think that's where it will happen. It's the non-banks are going to innovate here the most.
Yeah,
thank you, Gil.
Totally second that. I also can't recall who that was, but I mean that is fascinating because it's high in tech. It's AI, but using it at a very simple level that ties into the market. And there are some examples of sort of microfinance that is it can be mobile payments enabled, somewhat blockchain enabled. There's some really cool examples in Africa, and it's a really good question, I think, because this is a massive opportunity. I like to use M-Pesa in Kenya, which is now in many other countries. It's called how to bank the unbankable, and it's basically you bank the unbankable by dealing with the bank. So they've really put this power in the informal market, etc., and it's spurred economic growth, etc. Now it's morphing into other things like investing, raising loans, etc., based off, like Gil said, it's like using basic GSM mobile phone technology is fascinating, because it's not how can we put an iPad in everybody's hands like in Tanzania. It's like how can we meet them with the tools they have now, like because then you can bring that product and start engaging. And this thing of fundraising, investing is so crucial to lowering the barriers for access to real estate and like for housing, particularly in Africa. So also there's some examples I can't quite recall, but like Gil says, that is such a cool example that it's possible, and it's high tech, but it meets the market at the right place. So most definitely there's a lot of opportunity there, in my view.
Okay, let me just quickly.
I'm going to move to the panel, to the poll results. I've been watching retail and office vying for top spot here, and one has just become a winner in the last, quite a clear winner in the last 5 minutes. But the question is, which sectors do all the attendees think is going to have the most technology disruption in the coming years? And starting from the beginning, hospitality scored 2%, and industrial was on 4%. Next up, third from the bottom was construction. Housing's on 15% in third place, and in second place it's retail, 27%. And I think responding to the pain, we've been talking about offices coming in at 36%, being unfortunately the category that's going to see the most technology disruption in the coming years, in line with our attendees' thoughts and feedback. So thank you very much for that, guys. I think we're probably all in agreement with you, hey? Got one last question before we wrap up. And there's, it's tough to choose, and I'm sorry, guys, for the ones that thank you for all those excellent questions. I think we'll do our best to answer them separately, but this is quite interesting and topical one. How do we as real estate professionals draw the line between social and more formal digital platforms? So I suppose the question is, on the one hand, we've got social platforms like WhatsApp, Instagram, Facebook, being solutions, and then you've got the really sort of formal, very specific tech that's provided for property. And is there a line that needs to be drawn? Will they be merging? What problems can we solve for property using social media platforms? I'd be interested in thoughts. Kevin, you look like you're interested.
Yeah, it's a great question. So I believe of ubiquity. You want a platform, you want an environment, you want an industry that is seamless. Earlier Sean was talking about Tesla and electricity. Electricity is ubiquitous in the concept of you don't have to think where it comes from. Okay, maybe sometimes we do with load shedding and the like, but generally I walk into a room and I can turn a light on or I can plug something in. I don't have to think about the source of it. I can leverage it in the way that I need to. And I think that's what we've seen with formalized platforms, whether it be a SAP or a property management system or a facilities management system that serves a very, very specific function. I think with the introduction of information, the AI, the sensing, the devices that come with things like IoT, I want to say all the buzzwords that are out there, the convergence that we're seeing, I think there's a hyper-convergence between the two, formal and informal, becoming and I want to say, when I say informal, I'm talking about social media. I've kind of seen a hyper-convergence to the point where you can order pizza through WhatsApp, pay using SnapScan, and have a guy from Uber deliver it. All on call it social media platforms. I think we run our businesses in WhatsApp, which much to my disgust often. But so I don't think that there is going to be a separation. I think that as industries merge and mature, and I think as tech becomes more mature, the divide sort of between the two will become smaller and smaller until you get to a place where you achieve that ubiquity or that singularity, where the platform in which I communicate to my mate Sean is the same thing that I engage with my supplier Gil to come and install solar panels, whatever it might be that we're dealing with. I think that's the very nature of the convergence of technology, both at a formal and informal level, because we don't separate our entities that way any longer.
Cool. Guys, thank you. I think I'm going to move on to summary here if I can, and thank you so much, firstly, for the attendees, for your excellent insights and questions, and again, apologies we couldn't get through to all of them. And then I think, guys, for the panelists, this has been really interesting, and thank you all for bringing your A games. Just to summarize and unpack, the first question was, given global trends, what Proptech innovations will we see being adopted in Africa in 2021, and what won't we? And guys, this summary is for people who perhaps had to pop off, got phone calls, got interruptions, or arrived in here late. The first question is this. The answer, the first opinion was, and this is an unpopular opinion, is that unfortunately it's pragmatism first. The industry has been in a state of turmoil in the last year, and we're really now going through a period of recovery and stabilization. So certainly, I think as far as PropTech innovations are concerned, it's going to be driven very much by the concept of painkillers versus vitamins. Gil indicated that we're going to be levered into adopting tech where it's assisting us with our very unromantic lowest level of Maslow's needs, which is survival. So if people can provide tools that are going to facilitate survival, that's certainly I think where the interest in adoption is going to be. The next question around PropTechs in Africa, unicorn or zebra, and I think the point has really been well made that the world is fixated on unicorns, and everybody sort of, to use Gil's expression again, is starry-eyed around this obsession or dream to get to billion-dollar valuations. I think as the attendees indicated, what is realistic and practical? And I think that's a strong theme coming out from Africa is we are less mature than other economies. So we first and foremost need to be very practical. And I think the thinking there, the advice coming from the panelists is avoid high-risk moonshots. Rather focus on being very disciplined in solving real-world problems, focusing on business models that get you to break even and businesses that are going to be around for 5 years. It's tough for investors to digest. It's tough for those guys who are dreaming, but that's the reality we're dealing with right now. And I think to also lean on some thoughts there is possibly that's something that Roland raised is tech may not be necessarily front and center of the value offering. There may be a consulting piece and startups may be facilitated by consulting and supported by tech. However, the reality is that entrepreneurs have to dream and we have to be incentivized by the big goals. So if the benefit is that property, as Gil alluded to, is a massive industry globally, and I can certainly say it's a $27 trillion valuation globally in the commercial real estate space. And Sean can probably, your valuation on the resi side globally, if I can put you on the spot.
Well, sorry, just I cut out there a bit.
What would your valuation be for residential property globally in dollars? If I can.
In rands and cents. Well, in rands, 100 million gazillion. In dollars, maybe 10 million gazillion. There was a South African report done on the value of the South African property market. That was, was it 1.7 trillion? I can't quite recall, but it's big. Let's just say that.
Look, certainly, I think, thanks, Sean. Sorry for putting you on the spot, but the point is where there's a lot of money sloshing around in these massive industries, there's going to be an inefficiency, there's going to be pain, and there's going to be a need to solve that inefficiency and pain. And I think that's sort of where PropTech is playing into. The third question, how will PropTech fit into Africa corporates and commercial real estate strategies? So I think Roland made some really good points around what he's seeing in Nigeria, where the engagement model is slightly changed, where the engagement is slightly more collaborative, where corporates are ushering in startups and offering almost a petri dish where they can incubate inside the comfort of a corporate. I think to talk to that innovator's dilemma concept where and certainly raised later on by Kevin, where he indicated that for corporates, they're under so much pressure for business as usual, that they are receptive for the PropTechs outside of these corporates who hyper incentivized to come with solutions to actually present them with smarter and more efficient ways of doing business. So that's probably where specifically in Africa we're going to see PropTech fitting into corporate and commercial real estate strategies, where PropTech are providing potential ideas and opportunities for efficiency, and the corporates are collaborating with them in some shape or form. The last point, which I really liked here, was the point made that from a predictability point of view, we have seen the model certainly overseas of fintech leading tech innovation inside of corporates, and lately we've been seeing how that ladders out in a mature economy with PropTech. We've of late been seeing in Africa the same trend repeating itself, where fintech is leading, and as the opportunity as the ecosystem matures, so too then can Proptech come in later. So yeah, I think we really just need to look offshore and see what those models look like and what those patterns look like, and then they can be replicated locally. The fourth question: will commercial venture capital and venture capital investment into the Proptech sector grow? We went through some fairly unpleasant and unpalatable numbers regarding venture capital investment in the Proptech space in Africa, and I think the takeaway there is we are really dealing with an immature ecosystem. The first point is there's lots of sources of data from a funding point of view. Certainly Proptech is in its early stages, and Africa as a VC environment is lagging. However, there are some strong drivers. We've got some residential delivery lags. We've got other operational challenges that Proptech can solve. And we've got the opportunity to learn from fintech. So I also really like the point that Gil raised, where he indicated that there's an opportunity to potentially where currently the VCs in South Africa are generalized, and what we're seeing in maturing markets is these VCs are starting to center around specific verticals, and he alluded to two businesses globally, being Fifth Wall and Metaprop, which are focused Proptech investment businesses, which actually take investment money from the corporates and actually funnel it into corporate venture capital, where potentially they can get better returns for their investments, and potentially also do a bit of a left pocket, right pocket scenario, where they're both investing in a business and then using that business as a service provider. So I think that's the landscape we're playing in. But I think Kevin then called out the sort of egg and chicken syndrome, is that businesses are only going to do so if they're incentivized to do so. There needs to be an incentive. Businesses aren't running charities. They're not in the habit of just giving money to tech startups. And what's needed is for that egg and chicken is when that first Proptech pops and there's a case to be made and there's a home run, then there's a reference investment that can then be passed around the industry for people to look at. The challenge is that will then allow money to flow, but which comes first if everybody's waiting for that home run? So yeah, very good point there, guys. And then I think finally, just looking at the trends, what we're planning on seeing, I think everybody on this call is very clear with the fact that office retail have taken a battering. There's certainly, I think I love the clarification here. Is step one, what are the trends, and then two, how is Proptech going to respond to the trends? And I think some of the ideas around repurposing of office space, from the more vanilla repurposes to co-working, and obviously the Proptech required to support that quite high friction, high volume business model, to looking at multi-use office parks being converted into multi-use real estate solutions, to even urban farming and vertical gardens, and then yeah, so that's something in the office space. Another point that was called is which I really liked, is the decentralization of office into residential nodes. Again, that's going to require Proptech to support and manage those processes. And then I think that the business as usual stuff, e-commerce was always around, it was always challenging brick and mortar, and simply all that's happened is the last year has just accelerated that development. The guys, I've really found this super valuable, and I hope everybody else has. I'm going to open up to the panelists just to close off, and thank you again to API for hosting this, and thank you, Roland. Sorry you're not with us to say goodbye, but Kevin and Sean and Gil and Kiffer, thank you very much for your contributions to the session.
Just very quickly, I promise. Thanks for that roundup, Will. That's really impressive and actually quite useful. I haven't seen that done to that detail in a lot of webinars, so thank you. Yeah, it's been an awesome discussion. So thank you to API and everyone, and obviously from SA Proptech and Proptech Africa, our NGO associations, thank you very much. And just on your question, I did a little research very quickly on the side there. And the SA property industry, so that's like the GDP equivalent, is 4.9 trillion rand, which is 1/3 of $1 trillion. So that's South Africa, and obviously this paints a bit of a picture. But yeah, thanks. I just had to put a lot of zeros into my calculator to try to work that out in dollars. But anyway, thanks. Yeah, thanks everyone.
Thanks. Can you hear me now? Can you hear me?
Cheers, guys. Thank you for joining us.
Cool. Thanks for your time, guys. Take care of yourselves. Be safe out there.
Thank you.
Bye-bye. Bye, Roland. Thanks.
Bye. Thanks. Bye, everyone. Yeah.